What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we did take a day to cool off, but overall the market is still looking bullish. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 0.15%, but we did hold up above that breakout level. Remember, just yesterday SPY broke out above two critical resistance levels. We broke above the resistance trend line, and we broke above the price target just above 451. So the second day in a row above a breakout level is a bullish development, and you can see there is a wick below the candlestick, which does tell us that buyers were stepping in below that support level. So this still does look like a breakout look for the S&P 500, and 2 days in a row it's starting to look more and more like the real deal breakout. We still have the very strong bull trend, and our 20 simple moving average critical support is now sitting here at 445. And the higher that 20 simple moving average goes, the more it's going to push the price action even higher. So continue to watch that price target above at 457, and then above that we're looking at another price target at 461. Remember, the longer SPY spends time over 451, the more likely it looks like SPY is heading into the 460 range. So right now, with the strong bull trend in price action above 451 and above our resistance trendline breakout level, SPY looks very bullish, and we still could get that potential blow off top. You'll see when we get over to the NASDAQ 100 what could have potentially stalled this market today, and it's really not that bearish of a development. Overall, the price action and the trend are still looking very bullish. So like I always say, don't bother trying to call a top in this market, and as long as the price action and the trend are bullish, you need to remain objective and stay bullish as well. So to the downside, look for support at 451, 449, and 446, which is also where that 20 simple moving average is going to be. If we get below the 20 simple moving average and we get a daily close below it, we could close this gap right around 443, and then we might see the market starting to look like it's rolling over. But we're just not seeing that, so stay the course and stay bullish. We're going up on low volume, which is completely normal, and always remember the saying that the stock market takes the stairs up and the elevator down. Effectively, what that means is the stock market goes higher on low volume and goes lower on high volume. You go down much faster than you go up, but as long as you're staying above critical support, you don't just want to assume you're going to take an elevator down. That's simply just not how the market works, so continue to stay objective and watch those support levels. On the NASDAQ 100 triple Qs, we were pretty flat on the day, only going down 0.08%, and here's where you can see why the market likely stalled today. Just like I told you yesterday, the NASDAQ 100 went way too far, way too fast, and got way too far extended above the upper Bollinger Band. Today, the price action tried to go higher, but 2 days in a row above the upper Bollinger Band was too much resistance for the NASDAQ, and we did see sellers coming in at that level right around 380. So 380 could be a resistance level you need to pay attention to, but more than likely what you were seeing today was resistance from being outside the upper Bollinger Band. The price action was getting a little too far away from our 5 EMA, and overall we still do have a very bullish trend on the NASDAQ 100 triple Qs. So price action is very bullish, almost too bullish to go much farther until we get an expansion of these Bollinger Bands and these moving averages start to catch up. So it is possible the triple Qs continue to trade sideways or possibly come back down for support at the 5 EMA or our support level right around 376. So look for a support zone around 376 to 377, or a potential that we just continue to grind higher along the upper Bollinger Band as they continue to expand. The critical support level on the triple Qs is down here at 370, and we need to see price action closing below 370 for the triple Qs to start rolling over. We have a gap to fill at 368, but don't bother focusing on that gap as long as we're in such a strong bull trend, because it's not likely we're going to fill that gap until the next stock market correction. To the upside, our next price target we want to pay attention to is 388, which does tell us we still have significant upside before we hit another significant resistance. So watch potential resistance at 380, but more than likely we won't see that acting as resistance once we get an expansion of these Bollinger Bands. On the Dow Jones, we were flat on the day, only going down 0.05%, and we did get somewhat of a doji candle look, closing just above the 5 EMA and holding on to the full bull trend. Our critical support on the Dow Jones is at 353, and below that we could close the gap at 351.8, or retest the 50 EMA right around 350. We have strong support around 351 as well, but remember, below 353, the Dow Jones will look like it's starting to roll over. Watch for upside resistance at 355, the previous all-time high at 356.5, and then our price target at 359. On the Russell 2000, we were up 0.2% today, and we do see the Russell bouncing after we did get rejected at resistance at 227. We found support just above the 5 EMA, and we still need to break out above 227 to get to our next price targets at 230 and 233. Above 233, the Russell 2000 will start looking like a bullish breakout, and we possibly could see new all-time highs. But don't look ahead, we still need to get above resistance at 227. Overall, we don't have a trend for the bulls just yet, but we are starting to get some bullish developments with the moving averages. The 13 EMA is back above the 50 EMA, and we do have a positive sloping 20 simple moving average. So to the downside, look for support at 224, 222, and 221, and below 221, we will look like we're rolling over yet again. On the ARKK ETF, we were down 0.62% today, and we see ARKK still holding up above all the moving averages with the price action. We did get the full bull trend yet again, so we could see ARKK trying to break out as soon as tomorrow. The critical support is right around 120, and below 120 we could fill the gap at 116. To the upside, watch for resistance at 123 and 125.6, and above that it'll look like a bullish breakout with resistance at 128. On the VIX, we were up 1.79% today, so we do see the VIX spiking just a little bit on a day the S&P 500 is cooling down. Overall, the VIX is still below all the moving averages, and we do have the full bear trend. So the VIX is still looking like it's going to continue to head lower, and look for this gap close just below at 15.7, which is also going to coincide with our support trend line. If the VIX sees volatility after bouncing off of this support level, that will be yet again another higher low, so it will be something we need to pay close attention to. But for the time being, it looks like the VIX will head lower as the stock market heads higher, and as we get into those next resistance levels in the indices, we could see another potential volatile spike in the VIX for a pullback or potentially a stock market correction. The levels you want to watch on the VIX for a pullback or a correction are going to be levels above 20, and above 18.2 will be your early warning sign. A close above 23 on the VIX will tell us that a stock market correction is here. On Bitcoin, we're currently down about 0.05%, and price action is below our 20 simple moving average of support around 47,500. The bad news for the Bitcoin bulls is we're very close to losing the full bull trend, and we are trading below that critical support at the 20 simple moving average. So the next support levels you need to pay attention to are at 45,000 and the 50 EMA at 43,600. Below that, we still have support at 43,000 and 40,500, but it will start to look like Bitcoin is rolling over if we get to those support levels. To the upside, we now have resistance at 47,500 and of course our price target at 51,000. The bullish breakout for Bitcoin will be price action breaking out above 51,000, and that could tell us to expect brand new all-time highs. But as long as we're below 51,000, we have to remember that we likely got close enough to that price target to possibly see a correction, so you need to stay defensive while we're trading below this 20 simple moving average and watch these support levels closely. On Amazon stock, we were up another 1.44% today, proving that Amazon stock is no longer just a dead cat. We're going up on increasing volume, and we now have the second day in a row above that critical level at 3,400. So this is very bullish breakthroughs for the price action, and we're very close to losing the bear market trend. The 5 EMA is crossing back above the 50 EMA, and all of the moving averages are going back to a positive slope, which does tell us that Amazon could be getting ready to go into another bull market. Watch for resistance above at 3,500 and the resistance trend line right around 3,525. Above that, we still have resistance at 3,552, and the gap fully closes around 3,580, which will be another resistance. The most bullish breakout for Amazon will be breaking out above this resistance trend line, and that will tell us to expect a quick close of that gap at 3,580. But overall, Amazon is starting to look bullish yet again, so watch for strong support around 3,400, and below that, we want to see the price action holding up above the 50 EMA, which is just below at 3,387. Below the 50 EMA, we could still find support at our 20 simple moving average at 3,311. On Tesla stock, we were up 0.66% today, and we did see Tesla finally closing that gap above at 732. So there's no more gaps to fill on Tesla stock, and we are above that resistance breakout level just above 732, closing up right around $735. So this does look like Tesla could start running to our price target at 765, and remember that Tesla does have the full bull trend. So a bullish price action breakout on increasing volume with the full bull trend tells us that Tesla could easily start running to our next price target. However, as you know with this stock, it's never always that simple, so you still need to watch downside support because we still could come back down to form a higher low before we continue to run higher. So to the downside, look for support at 732, 714.5, and the 20 simple moving average at 705. Below 705, it'll look like Tesla is rolling over yet again, and we could come back down to the support at 692 or our support trend line right around 680. So watch those support levels, but overall Tesla does still look bullish, and it does look like it's starting to break out. So we could start to see Tesla break away and start running. So watch for that price target above and watch the critical support. On Apple stock, we were down 0.84% today, which is really no surprise because yesterday we were way outside the upper Bollinger Band. Just like I said with the triple Qs, you can't go too far too fast without seeing some type of cool down. We're seeing Apple break out on a huge bullish candle, and now we're cooling down and we're still holding up well above our support level. The breakout level was right around 151, which should now also be a support level, and the breakout support level is right around 150. The critical support is still our 20 simple moving average, which is right around 148.5, and we need to hold up above that level to maintain this bull trend to get to our price target at 156. So overall, Apple still looks very bullish, and there's no concerns with the price action or the trend. So stay the course until we get to that price target where we could see another pullback. On the financial sector, we were down 0.13% today, and we do see price action below the 5 EMA for the second day in a row, but we still do have the full bull trend. The industrial sector was down 0.28% today with price action above all the moving averages, and we still do have the strong bull trend in the industrials. The healthcare sector was down 0.13% today with price action closing right on the 5 EMA, and we still do have the full bull trend. On the energy sector, we were down 0.68% today, closing just below the 20 simple moving average. The energy sector is very close to going back into a bear market, so we need to see a bounce from here and price action getting back above the 50 EMA to fight off the bear trend. So jumping back over to the S&P 500, you can definitely still see there are a lot of bullish sectors. The financials, the industrials, the healthcare, and the tech sector are all still in bull trends with bullish price action. There's no way you can look at this market and see anything other than bullish because the price action and the trend are still bullish. So if you're remaining objective, you need to understand that this market can and probably will go higher. Watch that critical support level breakout on SPY, and as long as that support level is holding up, you want to look for higher prices as SPY climbs towards 460. Obviously, everything is subject to change if you start to see price action breaking through critical support, so watch the price action very closely because that will always be the most important indicator if things start to turn for the worse. But stay the course and let the trend be your friend, and as long as you're staying objective, you should be doing very well in this market. This market is acting very technically sound as long as you're remaining objective and blocking out the noise. Also remember that I do have my own trade alert service that only trades TQQQs, and it does very well in all market conditions. I'm running a 50% off promotion code for your first month, so now could be the best time to try out BANC trade alerts. If you're interested in checking it out, you can find out all of the details and how to join in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.